All right. Good evening, everybody. All right. This training was supposed to come in earlier, but we are here now, and let's look into what we actually have. Um, yes. So this is basically an advanced series for amateurs FX 1, 3. Okay, what's the FX advanced amateur? Funny, but yeah, that's what it is. And we're going to be looking at few things: points of interest, fair value gaps, expansions. I believe in the last class that we had, let's quickly look at what we had last time. Yes, we had, let's look at the syllabus. Okay, we've treated structures, trends, we've treated break of structure, change of character, we've treated other blocks. Okay, now we are in fair value gaps and expansions, and we're also going to look at optimum trade entries, Fibonacci, and the sorts. So let's go back to where we were. Okay. Right. So what's the logic behind fair value gaps? Basically, in the market, right, usually price moves up and down, but ultimately it is moving in one direction. Okay, so there might be an up and down movement. Ultimately, price will end up, achieving an objective. Each movement of price is to achieve an objective, and there are several objectives which price is most likely to, go for, which is grabbing liquidity and printing these fair value gaps of the thing. So the logic behind fair value gap is that there are periods of imbalance in price movement. Now we're going to look at that on the charts to know more about it. So the gaps price creates are usually very visible. You can see it, and the fair value gap is a very effective point of interest. Like, you can be rest assured that at some point price is going to try to fill up the space, the imbalance that it left. So, but price has 4 point of interest hierarchy. So the reason why we should understand, the reason why point of interest is important to us is because from point of interest, you can either find price objective, or you can frame, or you can expect price to react from a point of interest. So price can either react from a fair value gap or use it as an objective, in that it is buying to or selling to fill up a fair value gap, okay? Or it can serve as an additional confluence, when framing a trade. We're going to look at all of those things on the chart. So we also have the expansion type entry, which is also a point of interest, meaning when price just suddenly, runs off in a particular direction, automatically you should know that, okay, price wants to either go that direction, or you should be reactive. Okay, we're going to look at how expansion type entries work, as they happen almost all the time. So liquid weeks, or you can say liquidity weeks, it simply means you placing your entries on your inducement. Usually price is interested in taking off the closest liquidity to your point of interest and might not even get to your order block. Now, the reason why we're talking about point of interest is because it is from your point of interest that you frame a trade. Okay, it is from your point of interest. Okay, point of interest that you frame a trade. That's why it's important, because points of interest, just like the names imply, means that these areas we are expecting some kind of reaction. And you know that as a trader, we live for reactions in the market so that we can, you know, act accordingly to what we are seeing. Reactions, point of interest are like indicators to tell us, okay, this is what is most probable to happen in a particular market. Then we have the other block, which we treated last week, which we said it is the last candle before an expansion. So whenever you notice price close to your point of interest, where there is more than 2 points of interest, it will represent a very valid zone where price will visit. We'll look at what that means on the chart. Okay. So note that if price wants to react from a fair value gap, it will react from the consequence encroachment, which is 50% mark of the fair value gap. Okay, I'm going to show us how that looks, although that's not really important like that. So the logic behind expansion type entries, because we are looking at fair value gaps and expansions, so when price has actually created a block, it violates it with an expansion candle, usually a very long one or a very long candle in one direction. Okay. Price retests the breaker block and continues to the initial direction. Wherever you see a breaker block, just expect price to react on the breaker block. Okay, do not think to actually change the direction. So your expectation while engaging in expansion type trades, targets should generally be liquidity closest to your entry. Now let's look at the charts for more explanations. Okay, so I'm gonna open the charts here. Okay. Now what we have here, I just want to explain what it means, not to look, we're not analyzing anything. So fair value gaps, you can clearly see from here to here, you can see the space. After price rallied, what happened? It eventually came, filled up the fair value gap, did it? And rallied again to fill up a fair value gap. You can see the space. You can even see FVG. It's an indicator that I use on TradingView. So price will see it if you Sam's FVG. Okay. So price will always, always, always go to fill up the fair value gaps. Okay. So this is that's type of fair value gaps. So how does that now resonate with us as traders? So you know that as day traders, we are mindful of our 4 hours and we're mindful of our daily candle. So here now on this GPAUD, that is why you must not rely on just one POI, because if you're looking for the fair value gap POI right here, you notice that all of them have been filled up. So that means you have to look for another thing, another type of trade, another type of confluence to actually engage in this market. So you need to have a solid understanding of market structure to know when we are in, an uptrend or a downtrend. And basically, a downtrend is the formation of what? Higher highs and lower lows. And lower highs, okay, and lower lows. So it's high, it's an all high, price went down, didn't take the high, so it's basically a lower high. So should we be looking at a lower low? So this is just basically you understanding market structure. That's the first thing. Market structure is the first thing. So even if you engage it, you'll be having over 79 pips. Market structure is the first thing. Then you need to also understand, your point of interest, your liquidity grabs. So remember we talked about, liquidity wicks. So you can see a lot of wicks here. You can see this wick here. You can see a bunch of equal lows here. So as a price action trader, you understand that price only has one objective, which is what? To seek out liquidity. So, zooming down to the daily on this place, you can see that this fair value gap price filled it, but formed a bunch of liquidity, equal lows. So if liquidity could be equal lows, equal highs, and all of that. And looking at price here, this price action here, you can see price is bearish, obviously. It's a contraction candle we are seeing, and usually after contraction candles, we have what? Expansions. So yeah, so we talked about the 4 hierarchies of point of interest, and we said number 1 is the fair value gap, which we have seen. Okay, let's look for other examples of fair value gaps before I start doing another thing nobody's saying. Let's look at A. Okay, good. See a fair value gap here. I see it. So if anything, just have at the back of your mind that price will one day come here. And remember, this is a one day time frame, so it's going to take some time before price actually comes. Look at it. You look at it on the weekly, you find out that price is already very, very bearish. Very bearish. So it's possible that price might be coming to take this stability. Because this thing can also be like a tiny little inducement. So it's an inducement and it's an external liquidity because it's on a weekly time frame. So price will definitely, then we talked about other blocks. So you already know what another block is, the last candle before an expansion. Fantastic. Now, what's happening right here is also something like an expansion. I'll show you. Remember, we're talking about types of entries. So here you have, okay, wait, let me change the tool first. Here you have something like a little tiny 4-hour order block. Okay, you have that. You can clearly see it. Got it. Because this red candle was the last one before this big green consolidation, green. Man, this price action is insane. I love it. Look at this expansion. Like this Euro AUD trade is just an insane trade. Like I just love everything about it. Okay, so look at all this liquidity. Look at this equal low here. Price is definitely attracted to those lows, and you should see that it actually comes in there and raids it. I mean, these trades are really good to bank on, because me these days I'm banking on trades. I'm not just hopping in and out. I don't have that strength. I have to bank on it. All right, so that's just basically, so that's the 4-hour order block, which is usually strong in propelling price direction. But look at this expansion. So because sometimes these kind of things happen, and even in my beginning days, I will be confused. I will not know, how to navigate such a market. So you can clearly see now how price expanded, did a little retracement, expanded, consolidated, expanded, traced back to the place it consolidated, expanded again, retraced just a little bit to fill the fair value gap. It's a fair value gap. From this candle to this candle, there's a fair value gap. Price filled it, expanded. Now, imagine somebody banking on the trade. He just picked it from here and just held it. This kind of move can happen in like 2 months. Just pick and hold. These are the kind of things that we are actually talking about. So here we have it. Expansion type, you understanding that when price takes a significant high, right? Like from here now, let's trace the highs price took. When price started buying from here, this was the last time it took the high. Okay, it took the high, it bought. When it retraced back to the high that it took. It did not try to retrace back. Some people might think that these small things here, these other blocks, price will want to retrace. That's what an expansion means, that price took out either a previous high or a previous low. Now, seeing that price has, taken out this high, price came back to the high, created another high. This other high it created, it was like it filled like a fair value gap, right? Then it retraced back to this former zone where it did like a consolidation. And let me tell you, where people take losses is during this retracement, because at that time, price has not given you like a direction of what it really wants to do. So by the time it's just moving this back and forth, people have lost money. But what happened? You can notice that in the little movement, price is giving clues as to what it's doing. So imagine if price had given this engulfing bar, somebody entered. Yes, you would have made small money, but it would have not been sustainable. That's why you need to understand that the trend is your friend. So basically, when we talk about expansion type, we need to understand, like, see how price took this high. Price took this high. Okay. It's bought, took the high. When it did a retracement, what did it do? It traced back into the zone, the high. This was the high too. This was the consolidation. It's back into the consolidation it did. Okay, so we should be, whenever we see an expansion, we should expect that price should just retrace back into the recent block it broke, or the recent consolidation it has formed, to continue moving to the upside. Okay, so as a beginner, you should not be concerned with all of these complicated entries. You can just pick one of the hierarchies. You can pick either the fair value gap or the expansion type entry, or you can target liquidity grabs, or you can just pick one of them and focus on it. Combine it with your market structure and your support and resistance, and you're absolutely fantastic, good to go. So yeah, that's just it for now. Guys, I have come to the end of this video. I hope you have enjoyed it so far. Yeah, thank you all so much. As you watch this video, I hope you find massive value for your time. All right, that'll be all for now. Thank you so much. Until we meet again. Bye, guys.